Hey everyone, of late there's a growing interest among retail investors towards micro-cap investing. And the biggest reason is high return potential. Micro-cap companies with high earning growth rate have potential to generate high returns. But the challenge is there are more than 4,000 companies below market cap of 1,000 crore. And not every company will become a multi-bagger. So how do you identify the right companies out of the list of 4,000 plus listed companies? Moreover, what is the right price you should pay for the company? That's where in today's video, I want to discuss a very important trigger to identify microcap companies that can potentially generate great returns. And that trigger is preferential allotment. We'll discuss what is a preferential allotment and why it is important. Then I have done a detailed study of more than 100 companies in the last 2 years that have done preferential allotment to understand if it is really a key trigger for multi-bagger returns or not. And the results are very surprising. So I'll share my study with you all. And finally, I'll discuss 3 case studies on recent preferential allotment that are looking interesting. Alright, let's get started. So preferential allotment is basically a process where corporates raise funding by issuing shares to selected investors at negotiated terms. The key goal of this process is to raise funding. Here, please note that the offer price is usually at a discount to the market price. Now, why preferential allotment is important? So one of the key outcomes of successful preferential allotment is that company would get access to funds for its growth. And second, it would have strategic investor in its cap table. This preferential allotment is even more important in microcap companies because the allotment price gives a good indication on the fair price of the company. Because one of the biggest challenge with microcap company is to find the fair value of the company. So if the company is able to get a few strategic investors in its cap table, it suggests the confidence of those investors. Obviously, they would have done their research before investing in the company. And if they are investing in the company, they expect the company to do well in the future. Moreover, you also get a fair idea on the issue price that can be used as an anchor price if you want to invest in the company. So for example, if Mr. Ashish Kachulia gets a preferential allotment in the company, say ABC, at let's say rupees 500, you would get an idea that company ABC has high future growth potential and 500 rupees is a fair price of the company. So that would make your task easy to identify microcap companies in the list of thousands of such companies. Now, next question is, can you blindly invest in a company with preferential allotment? First of all, preferential allotment should not be the only parameter to invest in a company. Although it's a very important trigger to identify the opportunity, especially in the microcap space. Having said this, the key here is to understand who are the investors whom the preferential shares are allotted. Because here, the pedigree of those investors would play a key role. If the person or the institution who got the preferential allotment has a strong reputation of identifying microcap companies at an early stage, then it is a very positive signal. So don't blindly go for preferential allotment. Try to understand the history of investors or institutions who got the preferential allotment. Once you do that and get convinced, next step is to understand the reason for preferential allotment. Why is the company even raising the money? Is it to grow its business, launch new products or services, build new facilities, pay off the debt, or any other reason? Because the company should have a solid reason to raise the funding. And it's not just about preferential allotment. It's more about fundraising and how efficiently the company would utilize the fund to fuel its growth. And then, of course, you need to understand the business model of the company, its key strength, future growth potential, leadership detail, financials, and key risk in the growth thesis. So preferential allotment should not be the only reason for investment, but it's a great trigger point to shortlist the company and then study it in detail before investing the money. Now the biggest question is, how is the performance of companies that have raised preferential allotment in the past? So I have collated a list of more than 100 companies that have done preferential allotment in the last 2 years to gauge their share price movement. And the insights are very interesting. Let's have a look. Okay, so this is the list of all the companies that have raised preferential round in last 2 years. And I've sorted this list in terms of latest preferential. Then you also have preferential share allotment price and then price on date of information. So basically this particular column is for the price at which the preferential has been done. And this is the column where the latest date on which you got to know about the preferential. So there will always be a difference because preferential is generally done at discounted price. Then I've identified the market price of the company, current market price, and calculated the return, right? So this return is basically the difference between the current market price and the price on date of information. Then you also have current market cap. I've got the trailing 12-month PE and the preferential detail, right? So if you just sort this list in terms of high to low, it will give you a very good idea. So company called Alpha Logic has generated 810% return that had its preferential on 19 November 22. So in less than 2 years, it has generated massive return. Then Catsys has generated 651%, Websol Energy has generated 553% return. Then company called Naib, Marine, and likewise. So recently, your Shakti Pump has raised preferential on 19th March 2024, and the stock is up 228%. Right? So you can get all these details, a lot of wealth generators. There are a few companies that have not created wealth, but net, this is your inference. If you look at it, out of 106 companies in the list, 30 companies have generated more than 100% return. So 30% rate, which is phenomenal. 22 companies have generated returns in the range of 50 to 100%. So overall, 50% companies have generated more than 50% return, which is an excellent strike rate. By the way, I got this entire information from Sovereign platform, which is providing excellent information, especially for microcap investing. There's a section called Discovery. Within that, you have preferential issuance bucket. If you click on that, you get all the information like company name, market cap, trailing 12-month PE, date of information, and remark. For example, Advait Infra has raised its preferential on 8 July. That included subscribers like Ashish Kacholia. And likewise, you've got information on Jupiter Wagon, GPT Infra projects, and so on. For example, recently, there was a preferential of Shakti Pump, and it was on 19th March. And once you get to know about this preferential on this platform, you can click on this read section to understand more about the company. So here you can get all the details. For example, out of Q4 of FY24 con call, they have identified important data points like company would keep the margin at around 14 to 15%. Order book is at 2,400 crore. These are very important information that you need to know before investing your money. Apart from this, you can get all the details about the company business, and you can get to know about the company's financials. Company's website detail is there. Basically, it is into your solar pumps, which is also a futuristic sector. So this information is quite useful if you want to get into the detail about the company. By the way, there's a very interesting feature that they've launched, which is Pulse. This basically provides you with the real-time information about the company that you want to track. For example, you can see information on Newgen, Apple. All you need to do is create your portfolio, list down all the companies that you want to track closely, and it will give you all the information in real time, which I feel is a fantastic feature, and that keeps you updated about what is happening in the companies that you want to track, or probably in the companies that are already there in your portfolio. So this is one feature that you want to explore on Sovereign platform as well. Now let us look at 3 case studies from recent preferential allotment that are looking promising. Okay, before we discuss the names, please note that the strategic investors can exit the company at any point in time. So please don't blindly invest in a company just because it has raised a preferential allotment. Please study the business to understand the fundamentals and valuation. And the stocks we will discuss are only for knowledge purpose to understand more about preferential allotment. Please don't consider it as buy or sell call, and make sure that you do your research before investing your money. Moreover, please note that microcap stocks have multi-bagger potential, but it comes at a risk of high volatility. So make sure that you understand this risk before taking any investment decision. So first preferential I want to discuss is SHFM Mobility. Established in 2006, it's a microcap company with market cap of around 250 crore rupees. Company has raised the preferential allotment with date of information on 6 June 24, that is last month. Board of Directors approved the issuance of 11.2 lakh shares at 134 rupee per share, aggregating to around 15 crore rupees. Subscribers include Ashish Kacholia and Himalaya Finance and Investment, and currently it is trading at around 160 rupee. If you look at more details, its trailing 12-month PE is around 30. Basically, SHFM Mobility provides employee transportation services to major MNCs across India's key cities. Operating an asset-light model, it manages a fleet of around 1400 plus vehicles, including small cars, sedan, SUV, luxury cars and buses, with 173 owned and the rest leased. The company serves 42 sites in 10 cities, including Mumbai, Pune, Bangalore, and Delhi. Clients include prominent BPM firms like JP Morgan, Morgan Stanley, Capgemini, and Accenture. You can look at company's financials where revenues have grown from 30 crore to 82 crore, now at 118 crore in 2024. And net profits have grown from 1 crore to 2, 3 and now at 8 crore. Even the margins have expanded. For more details about the company, you can visit the website where you can find its offerings, client details, then you can read about its leadership, then service offerings in detail. You can also access the investor presentation by exploring the investor section that include all the details about the company, including the total fleet size, presence across the country, company's business model, etc. Then second preferential I want to discuss is KP Energy. KP Energy is a leading balance of plant solution provider in wind energy segment, engaged from conceptualization till the commissioning of wind energy and wind solar hybrid power projects. Its business mainly include EPCC, that is engineering, procurement, construction and commissioning of wind farm and wind solar hybrid project. Then operation and maintenance of those projects, and portion of its business also include IPP, that is independent power production, where it owns power generation asset with a total capacity of 19.9 megawatt, including 8.4 megawatt wind generation assets and 11.5 megawatt solar power projects. Although 97% of its business is from EPCC segment, company has raised the preferential allotment with date of information on 4th July 24. Preferential price is 412 rupee. Board approved the issuance of 6.9 lakh warrant at 412 per share, aggregating to 28.4 crore to Dr. Farooqji Patel, promoter of KP Group. And currently it is trading at 430 rupee. When you click on read, you get more details like company's market cap, which is around 3000 crore. Sector is clean energy. Previous close was 461. Trailing 12-month PE is 53. Sectoral PE range is around 50 to 90. So company's PE ratio is at lower end of sectoral range. Further, you can look at the financials on quarterly and yearly basis. And there is excellent growth in net profits. Then third preferential case study I want to discuss is Jupiter Wagon. Established in 1979, Jupiter Wagon is a premier manufacturer of railway wagons, component for passenger coaches, then alloy steel casting for rolling stack and track. It also has a wholly owned subsidiary, Jupiter Electric Mobility Private Limited, for manufacturing of commercial electric vehicles. Its product portfolio include open wagons, flat wagons, covered wagons, car carrier wagons, hopper wagons, draft gear, passenger coupler, alloy steel, brake system, brake disc, wheels, axle, then load bodies for commercial and heavy vehicle, heavy fabrication and so on. Now recently on 8th July, Jupiter Wagon board has approved the floor price of 689 rupee per share for QIP. Earlier on 7th May 24, Board of Directors had considered raising of funds for an amount up to 1000 crore through QIP. And currently company is trading at similar levels of QIP floor price. Now it would be interesting to see who participate in the fundraise. You can get further details about the company on Sovereign platform. For example, based on Q4 of FY24 con call, company has strong order backlog of 7,100 crore, and you can read other important details as well. Then you can look at financials where both top line and bottom line has grown at an exponential rate, and market has rewarded the shareholders with exponential jump in share price. Still, Indian government has massive plan on railway expansion, and Jupiter Wagon with current market cap of around 28,000 crore can potentially continue to benefit from this trend. Although valuations are a bit stressed today at PE of 85, but the latest QIP floor round, which is around 689 per share, which is the current price of the company. So it would be interesting to see who all apply for the QIP. So in this video, we discussed the concept of preferential allotment and its importance. We also looked at more than 100 preferential allotment in the last 2 years, and nearly 30% companies have generated more than 100% returns, and around 50% companies have generated more than 50% returns. That clearly signifies that preferential allotment is a key trigger in identifying potential companies across the microcap space. All this information is available on Sovereign platform that you can explore from the link in the pinned comment. Having said this, preferential allotment should be the first step for idea generation. Then you can deep dive to understand more about the investors' participation in the preferential allotment, reason for fundraise, along with company's fundamental, future growth plan and valuation. We also discussed 3 case studies on recent promising preferential that include SHFM Mobility, KP Energy and Jupiter Wagon. You can further do your study on these companies to identify investment opportunity. So this is it for this video. Tell me in the comment, do you think preferential allotment is a great way to identify potential microcap multibagger? I'll see you next video. Till then, take care.